Hi everybody, welcome to another update on the stock screener. In this video we're going to talk a bit about Jaguar Mining. As you know, the gold price has gone up a lot. You can see that here. Looks like it's starting to go to 4,000 and then 5,000. It's possible that we will keep on rising and reset at a higher level. So Jaguar Mining was one of the top picks. I also have two other ones, Soma Gold, Golconda Gold, Jaguar Mining, and these are miners that have one thesis in common, and that's filling up the mill. So every single one of these has excess capacity of their mills. Soma Gold can increase production from 600 currently to 1,400 with just a tiny bit of capex to expand the plant. So if they just fill it up, then this is going much higher. Golconda Gold is the same. It has a mill of, what was it, 1,300, 500, but they're currently only mining at 400 tons per day, 500 tons per day, so it can easily fill up that mill and go much higher. Jaguar Mining as well. There's one mill idle now, and that's going to be permitted soon. So they can fill up the mill, and that's only half of it. They have two mills that are only half filled, and then they can double production again. So we are going to focus now on Jaguar Mining a bit. They had a press release just today, and I think it's a pretty important press release. So they are doing some exploration for the next 5 years. What strikes me is that they think that they can get to 4 to 7 million ounces over all projects. They're currently only producing at a rate of 80,000, 100,000 if they bring the second mill online. That's enough for 50 years if you do the calculation. If you have 7 million ounces, then that's at least 50 years of mine life at 100,000 production. So either they can increase production, for example, to full capacity using both mills, and then they still would have around 20 years mine life if they get to this, or they will have 50 years mine life at 100,000 production. So I have upgraded the NPV flowchart to include 20 years mine life now, because if they think they can get to 7 million, then at least if you do the sum of all of this production, you will get 2.4 million, 3 million. So that's enough resource to have 20 years of mine life at least. So I have updated it to 20 years now. Could of course be even more if they do more drilling. So it's a very prolific region. Currently we are in 2025. The production is still low, 40,000. But next year, when the mill comes back online, we will go to the 80,000 level, and then eventually to 100,000, 130,000. You can see this from their presentation. Production will go to the 130,000 level, and once they have the resources, this could even go further. 200,000, 300,000 is possible because they are adding resources to the 5 to 7 million ounces of resources. That's enough to fill the mills 100%. So this is a long-term play. This is just the first stage. This could all get even higher to 200,000, 300,000. So the cash flows could go even higher than this. But I'm going to put it at this level, 130,000 per year and for 20 years. So when I do this, then you can already see that the enterprise value is only 300 million and the upside is 1 billion. So that's a 3x, an immediate 3x, because this is discounted by 10%. So it should already be 3x right now. If you, for example, check another miner, Agnico Eagle, then it looks like this. So these cash flows are not even going to the enterprise value. This is actually overvalued. You can see the cash flows are lower than the enterprise value. And with Jaguar Mining, it's the opposite. With Jaguar Mining, the cash flows are higher than the enterprise value. So you have upside. Okay? So that's because 10% discount rate means that the enterprise value should be already at 1 billion. Why is it not at 1 billion? I don't know. That's an opportunity for you to buy and then get a 3x. So what's the upside? Upside, we are going to use the universal formula. The upside percentage is the net present value minus the enterprise value, which I take somewhere here at the end to be sure. This is the enterprise value, divided by the market cap. And the market cap is 300 million. Let's update the formula like this. Okay, and then percentage. Okay, so the upside is 268%, right? That's more than a 3x going from here to here. That's 268%, right? That's when you buy this, this will go up 3x. But that's not the end, of course, because gold can still go higher. So let's say gold goes to my target of 4,500 by next year. And if gold stays at 4,500 forever, which is possible because it's going much higher, then the upside goes to 440%. That's more than a 5-bagger. Okay, you can see the cash flows. Potential cash flows are going from 300 million to 1.6 billion. So that's a 5x. Okay, if gold goes to 4,500 and beyond. So this company has a lot of leverage to the gold price. And it also has upside. So upside and leverage. Those are the miners that you should buy, the ones with upside and leverage. Okay, so this was the intermezzo on Jaguar Mining, and I'll see you in the next video. Bye.